I don't know what your position on the market is, but our position on the market is that we are in a bullish set of conditions for substantially higher prices. I can't give those to you here, but I will be very happy to have you take a trial or subscribe and get all the details for what we are saying the market's going to do and when those prices are going to be reached. So as far as we're concerned, the markets are building up to a important continued advance from here. And usually when I use the term important, what I mean is, somewhat distant price targets to the upside from where we are now. So keep that in mind. Over here on the left, let's say on 5/9 this week, the week of May 9th, should decline to 38.80 to 38.70. We were at 4,087. So we're talking like 200 points from here. And that's exactly what they did. They went down to 80 to 70. The low was 38.55. Actually, this is wrong. It's 38.55 that the market went to. So this was a really important move. At the time, the market looked something like this when we made that, before all this had happened. So we're super pleased with that. And it is the completion of this that has set us into motion, believing that we have a larger advance coming. Here in the center, S&P should advance from 4,044 to 45 into Monday, 5/16. That was made with them at 39.10 on May 12th. So they did advance to 4,044 to 45 right here. And you can see today we are now above that completion. That's pretty important, we think, and probably indicates, is leaning towards the more bullish set of indications that we've talked about. Then yesterday, S&P should advance from 41.83 or Friday, excuse me, up to 4,013 to 15. Here they are at 39.85. That was the current price. We're looking for them to go to 4,013 to 15. They went to 4,029.50. So super pleased with some of the movement that we saw. Let's take a quick look at everything, going back to the whole yearly indications and everything. Here is the yearly chart of the S&P. That should be pretty clear to see. We didn't forecast off the yearly chart in making our forecast for this decline. We were forecasting off the semi-annual chart. But I have now made a forecast for the year 2023 and where the S&P will trade at that time. And you can get that by taking a trial or coming in with a subscription to follow the work. So then this is the semi-annual chart. We had forecast that the last 6 months of last year would mark a very important top for a multi-year decline. That decline is underway. It'll have the usual rallies and so on, but we do expect this low to be taken out. And we've even got forecasts for that and so on. So we consider the advance that we're forecasting a bounce in an existing downtrend at this time. We do have the quarterly chart here. If your system doesn't show you quarterly charts, you shouldn't have that system. You should be using a system that does show you quarterly. I can't fathom why a system wouldn't show you quarterly charts. I really can't. I don't know what the reasoning for that would be, but it really leaves you in a lurch in understanding what the market's likely going to do. This is the quarterly chart. And then here we are with the monthly chart. And we have an advance coming. So the monthly chart may get kind of gussied up a little bit. We'll see. Then we have, of course, the current weekly chart. And this is all part of the decline that we were forecasting to get down to the 38.55 to 38.53. They got down to 38.55. And this is the beginning of a movement to the upside that we think is underway. And this is the daily chart showing that movement, at least tentatively on its way to the upside. So it's very interesting where we are and what the indications are for the S&P. I don't know if you're trading this or not, or trying to work out what the market's likely going to do. Here is a half-day chart. So this is where each bar is effectively a half day. This gives you an idea that the market has rallied up and is now kind of broken out. Again, backing up our contention that the market would be moving higher, and they are, and they have quite a bit further, we think, to go. So yeah, a lot of market movement, volatile, very quiet. Let's go down to the time frame that many of you may be watching, which in many cases is like a 5-minute chart. So here's a 5-minute chart of the S&P all throughout today. So after we had a pretty sizable drop here, which was indicated, those of you that know the square principle could look at this chart and understand how the square principle was looking potentially for further decline. We got that. And now the market's in a much stronger position according to its square. And when the market gets in those stronger positions, it can still be very quiet like this market is, but a quiet market definitely does not mean a weak market. A lot of times people will believe that because the market is trading quietly that it's getting in a very weak position and so on. That isn't necessarily the case. Don't mistake a quiet market for a weak market. There are specific things that a weak market will do to indicate that it's weak. There are specific things that a strong market will do to indicate that it's strong according to its square. And those things both can happen while the market's very, very quiet. Additionally, both of those can happen with the market being very loud, with the volatility being very high. That's not the case today, but it is something to just take note of. If you're, you may even not even be knowing that you're kind of thinking that if the market is slow, it's in a very weak position. And that's not true. So it's not a good thing to be thinking, even unconsciously. I don't know if you've recognized this in your life or not, but I think it's really important. If you believe something a little bit, it's in your mind and it stays in your surface mind, and you sometimes refer to it and you kind of believe it, whatever the thing is. Maybe it's something about yourself, or maybe it's something about someone else. I'm really talking more about sort of things about yourself, not just facts that we collect in life. But the more you believe something, the less it needs to be residing in your conscious mind, until finally, when you really believe something, it goes completely unconscious. In other words, it's no longer in your conscious mind. And that's why I tell people, because it's been my experience, that most of what you really believe, you're not conscious of. So think about that. Most of what you really believe, you're actually not conscious of it, because at some point in our earlier lives, things happened, we believed them, we swallowed them whole. And once you believe something, it doesn't fully, it doesn't require your conscious mind anymore. So whenever you believe something fully, it doesn't require your conscious effort anymore, and it operates on its own. So there are the reason I'm bringing this up is because, and this has been my experience, is that it would be a good idea to know certain things, like, is there a belief in you that you're not really supposed to be successful? Or is there a belief in you that the good life requires you to suffer? I mean, just ideas like these kinds of ideas. Somebody put them in your head, and for some reason, you may have accepted them. And if you did, then you can be fighting your whole life to get something going, but not be able to get it going because what's really directing you isn't conscious to you or to me, because we believed it at 100%. If you believe something at 100%, then it goes underground. So it is not a bad idea to spend some time with yourself, to sit down and to allow your mind just to go freewheel, to go from one thought to another, but just keep an eye on what comes up. Because when people say something's unconscious, that sounds like it's blocked from you all the time. It really isn't. It shows up, but we're not aware of it because it's so close. It's not held out at an arm's length distance. So if you want to see if this is true about yourself, and I can assure you that it is, there are unconscious beliefs, and the only way to get to them is by watching your mind and seeing that your mind will sort of place them up there a little bit. But in most cases, we're not really looking, and we're looking elsewhere, right, with our physical eyes out in the world. So the reason I do this is because I don't want those ideas, bad things that I've picked up, operating and running my life. And so when I catch something coming up saying this is how it is, just the mere recognition that it's merely an idea that you caught your mind regurgitating from the depths up, that alone starts to break its hold. And then you start to be a person who is both aware of your external, but you're also keeping the arrow of attention, which is something that my teacher taught me, Vernon Howard, on your mind as well. And by doing this, you are able to, you're not gaining new things, you're actually getting rid of old things, old ideas that can really operate for 100 years in somebody's mind. So that's what we want to be careful of, and we want to work with. So we are starting to pull back here a little bit and starting to show at least a mild pullback on the 5-minute chart. Let's go back to the 60 and see how all this looks here. Generally speaking, here's a really good thought. I just want to give you something that everybody here knows. When the market is in a trend, it makes, if it's a trend is up, it makes higher highs and it makes higher lows. We've all heard that so many times that it's really something we probably don't pay much attention to. But I don't know if you know what a gem, and that isn't something original with me. This was in books for years and years and years. I have things that are original to me, and I'm sure you do as well. But this is not one of them. But let's take a look and let's see the truth of this. Here's a high on a 60-minute chart. Here's a lower high. Here's a high that tested that high, made a slightly higher high. The market went down. And if you're looking just on a 60-minute chart, essentially you would have to say, well, this is the high they're trying to make, and it couldn't exceed these highs. And it made lower highs and lower highs and lower highs until finally you get into a position now where the market starts making higher lows. So it is really so obvious and so easy that we overlook it and think, well, that probably isn't that valuable. But it is actually valuable to be able to see that. And if you have other indications that the market is in a strong position, I would tell you that make sure that you're not watching those higher highs and higher lows only on a single time frame, like a 60-minute chart. Because on a 60-minute chart, this move up here may appear to be breaking the downtrend, when in actuality, it's just simply testing previous highs. So you do want to check it out on various time frames so you can really see that you're getting higher highs and higher lows pretty much no matter what. And the market broke to new lows here and so on. And then here's a half-day chart showing where we are right now.